My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job, not just to entertain, educate, teach. Call me, 1-800-743-CNBC. Tweet me at Jim Cramer. Hey, listen, when things go awry in this market, they go awry big. Today was a go awry big day. Dow plunged 647 points. S&P plummeted 2.08%. NASDAQ nosedived 2.48%. Sell. Because the market couldn't absorb all the negatives at once. Let's talk about some of the negatives, at least as perceived by investors. I want to start with the election. Going to the election, the conventional wisdom was that there'd be a real red wave, a real Republican sweep, because the opposition almost always wins big in the midterms, and voters don't exactly like rampant inflation. Wall Street wanted a big GOP win. Look, they're seen as the party of capital. That's why the market has been rallying furiously for the last few days. And while the Republicans still picked up seats in the House, they did much worse than expected. There's so much money out there run by machines, but those machines do get confused. A confused machine is a selling machine. We saw selling from the get-go, especially in the oils. Oh, my. Which no doubt would have benefited from fossil fuel-loving Republicans. And I like the oils, by the way. I actually bought one today for the Charitable Trust. Even as the market generally likes to divide a government because it means we're looking for 2 years of gridlock in Congress. Plus, over the last 90 years, did you know the markets rallied 100% of the time over the 8 months after the midterms? Didn't matter today, though, but that's okay. It's not 8 months. Second shocker. Last night, we got a big disappointment from one of the most visible family-friendly companies on Earth, Walt Disney. All right, so let's talk about the stock of Disney. The show started in 2005. I've been recommending this stock as a way for parents to get their kids involved in the market for decades. I can't go back on that. You know, I even have one physical share of Disney hanging in my office to remind me that it is a must-own. It is a big position for my Charitable Trust. It's been like this forever. But last night, Disney let its shareholders down. As we told Investing Club members, and I quote, "We are shocked and stunned by the poor performance, and we're certainly not alone," end quote. You rarely see this kind of 13% decline in a single day for an old-line blue-chip growth company. Embarrassing. Now, we got a lot of glib positives from CEO Bob Chapek on a conference call. If you read the release and you listened to the conference call, it sounded like the quarter was a huge win. So much that you think the stock deserved to be up 13%. Classic misdirection from someone who's either clueless or crazy. Like we told the Investing Club, and I quote again, the execution here has been so woeful, but we don't want to leave the franchise because nothing has changed in terms of Disney's ability to make iconic content and create great experiences, end quote. That said, if Disney were an NFL team, I'd say it's time for them to find another coach. Yep, it's time for Chapek to go. If he sticks around, you know what I might not mind doing? I might put him on the wall of shame. Yeah, I don't usually call for a CEO's head these days. I've become less angry, more relaxed. But I've been real patient with this Chapek fella and his now broken promises. Unfortunately, the franchise is clearly going backward, to the point where the board, even that board, must see that. And that means the head coach needs to take the fall for what surely feels like an 0-8 start to the season. Nice guy. Clock has run out, though. When you see a stock as famed and loved as that of Disney roll over, it causes people to lose faith in the entire asset class. I'm furious about this as a shareholder scorned. Honestly, if Chapek, listen to me, okay? If Chapek were to leave, okay, and they brought in pretty much any competent executive from outside, I bet the stock would rocket higher. And that's what I call an indictment. All right, now another ongoing collapse that people are saying it's going to be the end of the world, but it won't be, but I'm going to tell you about it. The collapse in crypto. Now, I've been waiting for this thing to happen for ages because so many Silicon Valley CEOs have told me that crypto's a con. At best, you can say the whole thing's a game of chance, not skill. At worst, it's Bitcoin Monte. There's no way of valuing these things, and the people who seem to rule the crypto world simply don't deserve our trust or the trust of the very sophisticated investors who tried to cash in on the excitement. Big names in this stuff. I'm not going to blame the likes of Sam Bankman-Fried, the putative king of crypto, and his faltering fund or his FTX exchange, to which I have to say, exchange of what? I will say this. I've begged the government over and over, using my platform, to get involved in this and regulate these securities. No one has come out harder about this, but it never happened. They never listen. It's almost like the government's taking an attitude of benign neglect, thank you, Daniel Patrick Moynihan, toward this whole class of assets. I say assets because if they were securities, the SEC might have felt compelled to step in and make sure people weren't getting scammed. Instead, it was all caveat emptor. I think we deserve more for the federal government, given that crypto was a $3 trillion market a year ago. Maybe that was the problem. Too many politicians chasing crypto campaign contributions, too many big sports names, I don't know, celebs, you name it. I wonder how many of the celebs in the major firms are getting called right now, tonight, to find $6 billion to what I hear FTX is trying to call around to get in order, if the Binance deal fails, they have something. Never sure thing. I don't like the situation. Now, the crypto world's less than $800 billion. But that's still a lot of capital, and hundreds of total junk coins that could be rendered worthless if the regulators don't at least play traffic cop. And by the way, of course, all the rumor mongers who say this is going to bring the whole market down, that's not true. Keep your head tomorrow. For the record, Sam Bankman-Fried, or SBF, is no longer the JP Morgan of crypto. Oh, in the days when he said that he'd get so rich from crypto he'd buy Goldman Sachs, I'm putting that plan officially on hold. Forget acquiring anything, man. He can't even sell his own company. Of course, crypto is just the most egregious example of speculation from an investor base that's addicted to gambling. But speculators were annihilated all over the place today. That includes the meme stock like AMC, where we have the CEO on later tonight, and GameStop, the holy grail of speculation, a stock that's totally unhinged from what's happening at the underlying company, which has very little going for it. If you ever say anything negative about GameStop, like when I called in from my hospital bed to warn people to sell it back when it was about, let's put it, 400, well, I didn't want anyone to lose money. The investor base will hound you to death. Now, I don't blame anyone for wanting to stay off their radar. They are vicious. They wrecked my mentions column on Twitter, just destroyed it. Maybe I shouldn't have been looking at my mentions to begin with, but I used to like to interact with people because I'm a friendly fella. But it got abominable when the memesters came after me, and I don't see that getting better under Elon Musk. In the end, these speculative stories, though, are a sideshow. What's really disheartening is what could happen to the bond market tomorrow if we get a bad consumer price index number. Interest rates have been stable. Until we got that result of the weak 10-year Treasury auction. When rates go up, you immediately get this knee-jerk sell-off in virtually everything, but especially in tech. As always, the semis lead the way lower. It really doesn't matter how the companies are doing. The semis are considered growth stocks, and growth stocks get assassinated every time the bond market goes in the wrong direction. Same for Fang and Friends, of course. If rates go higher, they all need to be sold. If rates go lower, they get bought. How stupid is this? Foolish, stupid, simplistic. Correlation that's come across that doesn't work. Some of these companies are doing much better than others, yet they all trade the same. That's for you to profit from. In the real world, they're different. But in the phony world that represents short-term stock thinking, if we get a steaming hot CPI reading, you're going to see more horror on your screen. So that's why people sold ahead of it. Doesn't help that the market's still overbought, according to the oscillator I filed from the S&P. It's hard to be bullish on a day where everything's visible goes wrong. That said, if the Fed's going to win its war on inflation, we do need a lot less speculation. Bottom line, this week will be known as the week speculators recognize they've simply been gambling. They got to stop kidding themselves. And they lack even the small edge you can get in blackjack, as long as you're sober and the casino doesn't kick you out for counting cards. Let's go to Adam in California. Adam.
Hey, Jim, first-time caller and long-time listener. I want to shout out to you. I want to shout out to you and your team for everything you guys do. Hopefully, we have some brighter investor days on the future.
There will be, and thank you for that, because we take a lot of heat. But you know what? I don't care. What's up?
So I'm expected to be a first-time dad any day now, and I'm looking for a few long-term stock investments for my baby girl's portfolio. My question is about a San Diego-based company here in Carlsbad, California, with another great earnings report, continued expansion into the space, and a stock that looks finally to be bottoming out. Would now be a good time to be throwing a few dollars into mine and my baby girl's future favorite golf company, MODG, a.k.a. Callaway.
Okay, my suggestion is you buy it for her, not for you. You're a little bit older. I like the idea of having a starter where she likes golf, you like golf. I think it's a good idea. It's a good company. All right, now, if the Fed's going to win its war on inflation, we need to see a lot less speculation. And this week will be known as the week the speculators recognize that they were just gambling all along. Mad Money today. Dutch Bros report after the bell. So are investors ready to take a sip of the Annihilator, some other good drinks? I'm running the quarter through with the CEO. Then does CyberArk have what it takes to buck the trend in the tech space? I'm getting the latest from the top brass. And AMC fell today at earnings. So is there more to the story than just being a meme stock? Don't miss my exclusive with the CEO, especially you apes who hate me so much. And again, I don't care. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.